before we get started with all the topics, maybe give the viewers and the listeners who listen and watch here some background of who you are and most importantly, why you are excited about Bitcoin.
Sure. Yeah. My name is Mike Jarmas. My friends call me Muzz. And my company is Lightning Ventures. And we put the fun in funding. That's right. Funding Bitcoin startups. That's what we do. That's what we're all about here. So Lightning Ventures was started in 2021. And it's a little bit different than a traditional VC. With a traditional VC, you give them a whole bunch of money and then they decide what to do with it, which is very cool and all. But if you like to make your own decisions and if you like to review deals yourself, what we do that's different is we have a syndicate. And a syndicate is really just a word for a group of investors who invest on a deal by deal basis into the best Bitcoin startups that there is for lower minimums. So for everyone who's in Lightning Ventures, which it's free to join, you can go to ltng.ventures and fill out one of those forms there. We'll send you a custom invite. And you will get emails that say Lightning Ventures invited you to invest in XYZ company, and you can look at some of our portfolio companies there. So for a low minimum of say $1,000 USD, you can be an angel investor and get started angel investing in these companies. Obviously, you can invest more. That's up to you. But that's really what we focus on. So if you're looking for exposure to the Bitcoin startup ecosystem and you want to invest, that is pretty much the best way to do it, besides going to one of these big Bitcoin focused venture funds and writing a much larger check in the 6-figure range, maybe 100 or 250,000 for a minimum for some of these funds. This gives you a way to have more control over your dollars and get to pick on a deal by deal basis. So that's Lightning Ventures. And most recently, almost a year ago today, we received a FINRA license from a crowdfunding portal license where retail investors can invest into Bitcoin startups, projects, open source projects. That's really what we're focused on. So if you're in Europe, you've probably seen something like Crowdcube. Crowdcube is a very popular one in Europe. If you're in Israel, there's one called Our Crowd. If you're here in the US, things like Start Engine, WeFunder, Republic, those are all similar, except they don't just focus on open source and Bitcoin startups. They kind of focus on everything. So our niche, what we want to do is just focus on open source and Bitcoin companies. So the minimums would be even less on a platform like this. And retail, you could invest maybe a couple of $100 into some of these startups instead of maybe $1,000 minimum. So as if $1,000 wasn't low enough, you could invest less on thunderfunder, and that's thunderfunder.com. We're about to push a really big new update to the platform there. So there's going to be lots of changes in the profile. It's going to be a really cool LinkedIn for the Bitcoiner. And lots of fun stuff that is coming there. So those are the two main products from Lightning Ventures, is the syndicate side of things, which is for an accredited investor. I don't know if we're going to talk about that. And then thunderfunder, which is for retail. But both of them democratize access to plebs and whales alike that want to get some exposure to the burgeoning startup ecosystem of the Bitcoin world. And that's really what I'm focused on.
That's super interesting. I love the fun in funding. Why did you say that? Do you have some fun aspect of like democratizing a love, but like where's the fun?
Well, I think it's fun to make your own decisions. So I was never a fund kind of guy. I'm not really like, I want to give a bunch of my money to this fund manager and have them invest it for me. That's great. A lot of people don't have time to review every deal because it takes time. It takes time to sit there and make your own decisions and dial up your deal flow and where are you getting deals and opportunities from and all of that. So not everyone has time for that. So a fund is much better for them. But if you like to make your own decisions and invest your own money especially small checks, this is pretty much the best way to do it. And anyone who knows the other Bitcoin focused venture capitalists in the space know that we are definitely a lot more fun. So that's where putting the fun in funding comes in, especially when you're working with founders or you're working with new investors. A lot of this stuff is really boring. How does a safe note convert into equity? And what's a liquidation preference? And how do pro rata rights work? And all of these things are like really kind of boring VC kind of terms and concepts that you do need to know and learn. But I like to try and make them fun, whether that's working with a founder and explaining it to him, or helping him through a financing or a term sheet, or an angel investor who's just getting started and wants to know, what do I do? Shut up and take all my money. We don't shut up and take all your money. You get to invest your money, which I think is one of the biggest differences and fun part about it.
It's really interesting. I love the democratizing the angel investing part of it. So just so that I understand it correct, so you look for deals, and if there's an interesting deal, you send them to the members of the fund, and they can then decide deal by deal basis if they want to be part of it or not.
Right. So you can think of it as on a deal by deal basis, you are kind of the venture capitalist, and the difference between an angel investor and a venture capitalist is angel investors are investing their own money. That's an important distinction between the two. So venture capitalists, they're often called GPs. Those are general partners. They raise a fund, and the fund has LPs, which are limited partners. And limited partners give their funds to the GP, and then the GP decides what to do with it, right? Angel investors are really maybe they're former tech executives or operators, maybe they're ex-founders, maybe they're working themselves, maybe they're somewhat retired. They're taking their own money and they're investing their own money either directly into the startup or via these various syndicates, which they call SPVs, special purpose vehicles, and they participate that way. So that's kind of the difference between a VC and an angel investor.
I never knew that. I always this was just two terms for the same thing. But I thank you so much for. I've literally I used those two terms, venture capitalist and angel investor, as kind of like this is the same thing.
No. So like somebody like Brad Mills, I don't know if he's ever been on your show or not, but Brad Mills is an angel investor because he invests his own money into startups. Whether you help kind of post investment or not, whether you're proactive versus reactive, whether you're checking in with the founder, seeing if you can add value, all that stuff comes into play afterwards. But somebody like Ego Death, they were in the news. They just raised a big $100 million fund. They are venture capitalists. They are not angel investors.
Or because they are raising money and then deploy that money. An angel investor made his own money, and with that money, he invests. I get that difference. Yeah. Yeah. Please go ahead.
And angel investors get more of a say, right? You get to decide. It's your money. You decide, as I like to say, what you're investing in and not investing in. And the venture capitalists do that on behalf for you. So the way that it would work in a syndicate, or at least the way that it started with Lightning Ventures and in a lot of syndicates, is we raised a pilot fund. So a pilot fund was very small. It was friends and family. And I was deploying that as a venture capitalist into these companies. And simultaneously, the company that's maybe raising $1 or $2 million, there's an extra bit that maybe is available or not full. So alongside your investment as the fund lead, you can take another 100 or 200,000 or so, and you can offer that to the syndicate to provide access to the broader network of superstars and all stars that you have. Now, sometimes the company is raising $1 million and they just don't have room. So there is no opportunity for the network to go ahead and invest because the round is full. But in many cases, it depends on the market and everything else, there might be room. So you're investing through your fund, and then you also have this allocation that you're able to put out to your group. And speaking of putting it out to your group, I like to say, Lightning Ventures is the world's largest Bitcoin focused angel investing network. Woo! And we have a lot of really smart people in there. I try to get all of our, founders in there, and they're someone like yourself would be fantastic, and it doesn't matter whether you're investing, Robin, in every deal or not. It's not like, oh man, Muzz sent me 12 deals and I haven't invested in any. That doesn't matter. But once you see something that looks really good and you want to have the founder on your show, or you're looking to potentially help this company, it might lead to an advisor role for you. It might lead to something else. So that's why the primary focus of Lightning Ventures, one of the primary focuses, but certainly building out the network with qualified, amazing people is super important. Okay. It's super important to have really, really amazing people, because when our companies do put up, flash a bat signal, so to speak, and need some help with something, we're able to blast that out to a couple of thousand people who have all been vetted and cleared and everything else, and say, hey, does anyone have an expert in this space? Can anyone help with this? XYZ founder is looking to do this. And, a lot of times we get some really, really great intros and stuff from our network, and they're able to roll up their sleeves and help these companies. And I know the companies appreciate it, and it comes in handy. And not necessarily every venture capital firm does that, or is able to do that, or wants to do that. Some VCs, they write a check and then they kind of just disappear. And that is not necessarily a bad thing. Peter Thiel, Founders Fund, they have a core tenet. It's part of their thesis where after they invest, they don't do anything. They stay out of the way. If the founder specifically needs help with something or reaches out, or maybe there's a board vote or a decision or a governance sort of situation, they will get involved, but they specifically don't engage. They don't meddle in it. And that's just how they do it, So all VCs kind of handle it differently.
I want to definitely talk about the changing roles once we have a Bitcoin standard and venture capitalist. If you are an angel investor and your hurdle rate is fiat versus your hurdle rate is Bitcoin, there's a lot of things changing. But first, I want to get one more question in that we kind of forgot, and the question is like, why you're excited about Bitcoin in general.
Well, I mean, that's a pretty easy one. And, it's basically the internet in, 1998, pretty much. So you had all of these startups and companies and, everything that was coming. You had all the browsers, you had the hardware, you had Microsoft, you had the ISPs and AOL and Cisco systems, and, the Amazons and Googles, and everything that was happening around the internet, I mean, was where fortunes were made and lost too, right? In the dot-com bubble. I mean, it has to be a real business. That's a whole nother discussion. But I feel like that's where we're at with Bitcoin right now. And if Bitcoin goes the way that we all think it's going to go, or it's going now, then these founders and companies that are building on, around, and with Bitcoin are going to have massive outcomes, massive outcomes. And honestly, it's a lot easier for a company to go from a $20 million valuation to a $200 million valuation than it is from Bitcoin to go from 115,000 to 1.1 million. Um, I'm not saying that that's not going to happen, right? I mean, we all know that that will happen one day. It's going to happen, but in a rapid amount of time, to have the kind of outsized outcome that you get from some of these early stage companies, it's just far greater. And I've seen it happen in my own angel investing portfolio, not in Bitcoin. Bitcoin's very nascent, as well as my investments in the Bitcoin space, even though there's 45 or 50 of them, are very nascent as well. But my own personal portfolio and everything else, and AI and robotics and you name it, I've seen companies go and do 100x in 2 years. Okay. And I think that that would be a lot for Bitcoin. to do that right now. So I'm excited because I think that we're just getting started. I don't even think that we've gotten started yet. And if we're talking about actual real outcomes, there aren't too many in the Bitcoin world. You have Fold, which is a publicly traded company. And I was lucky enough to invest in Fold in their seed round before I started Lightning Ventures. And that's going to be one of these exits that a lot of people point to because it is a pure play Bitcoin exit in the public space. And that is going to be a very good outcome. And, I sold one Bitcoin at $10,000 in October of 2020 to invest in that Fold seed round. And I can tell you that it has outpaced the price of Bitcoin today. I don't know if that'll be the case. It's still locked up. I'm very bullish on the company and I love the founder and I'm not like waiting to dump it. But look what happened in the meantime. Bitcoin ripped up to 65 or 70,000 and it crashed down to 15 or 16,000 and it sat around and it did all that it could do. And a feature for me and not a bug is when you do angel investing, you can't sell really. I mean, there are some, very limited liquidity options and secondary markets. And depending on the situation, okay, maybe there's a way to take a little bit of money off the table. But most of the time, once you write that check, you're done. That's it. There's no opening up the stock app on your phone and checking it every day and how's my investment in Strike doing or whatever. It doesn't really work that way. All you can do is support the company and cheer them on, and that's kind of the end of it. So for me, that's good because I'm not a very good trader. I'm not very good at, buying a stock and then watching it and forced with these decisions. Do I buy more? Do I sell half? Do I buy a little bit more? Like, I don't like that. So after you made a certain number of these investments, you just kind of wait until something happens in your portfolio and then you have an outcome. So Fold is a good one that people are going to point to. And, something like Coinbase, if you invested in Coinbase's Series A, well, especially their seed round, but their Series A was their first priced round, which I think they just sold Bitcoin then, by the way. If you invested in Coinbase back then in 2013 or so, I mean, you got those shares for like 12 cents, 8 cents. I think it went public at 400. It's trading around 400 today. That also took like 10 plus years. You know, the best outcomes take a really long time, and where else are you going to get 4,000x on your money? It's very difficult to do that, and I'm not talking about meme stocks and JPEGs and all of these type of things. Like, these are real companies. And that's kind of the power of angel investing, are those outsized returns. Now, full disclaimer, okay, and I know I'm talking all over this thing. Full disclaimer is the odds of that company at 20 million going to zero is astronomically higher than Bitcoin going to zero. Okay. So that's the thing is, yeah, you might in 2 years time, that company is worth 800 million. Okay. That definitely does happen. I've seen it myself. I've experienced that. But at the same time, Bitcoin isn't going to zero. So when you think about it in Bitcoin terms, it doesn't always go great. And that depends on cycles, and that depends on timing. That depends on the IPO markets and a lot of other factors, interest rates. Okay. So it doesn't always go wonderfully, but it can over a time period. Tim Draper has this story that he likes to tell where he, invested in this company and sold some Bitcoin, and it was a wonderful exit. He got back like, I don't know, 100x his money. But he measured it in Bitcoin terms had he not sold the Bitcoin. And he was like, oh, this is terrible. It was 5,000 Bitcoins down to 80, or whatever the number was at the time. Right. So I think that over a time period, a lot of it's going to outperform. But it doesn't mean that I don't think Bitcoin is going to rip, and Bitcoin isn't the safer play, but it's certainly what I like to think of as the best way to complement your hodl position and take advantage of some of the upside from these companies.
Yeah, there's this extremely important difference between, for me, Bitcoin is now the new savings rate. It is the new ETF. It's the new real estate. It's the new whatever you use to save your money and just like put it there. So that's my safe haven. That's where probably most people should put their money and just like let it sit and like don't touch it. And then looking at venture capital or like looking at angels, now I understand the difference because of you. Looking at an angel play and seeing like, oh, can I have some small equity position maybe in a company, or can I get involved in some sort of sense in companies? That's kind of the active investment. So it's like active versus passive. And for me, it sounds crazy for normal people, like for non-Bitcoiners, it sounds crazy to see Bitcoin as a savings vehicle and a passive investment, but I see it as that, and I see it the same way. Like right now, it's like, okay, I have my Bitcoin, but I'm also building my company. I have the first small position in one company just literally right now, so I'm really excited about that. And this is something that I think not a lot of people are familiar with. If you look at the people that are the richest in the world, there is always equity in play. Like the equity is the biggest differentiator between like where you can make you can literally just invest your own time into building a company, and you can make out of nothing millions of dollars. Like equity is the one play where you really get that crazy leverage. And if you don't build your own company, there might be existing companies that you can just invest in, maybe like €1,000, €50,000, 100,000, whatever your capacity is. And you can make with that, as you said, like those 100, 200, 300x, but that's not the same as the savings in Bitcoin.
So when you think about donations, when you think about something like even a portfolio company, we all know and love Geyser. Geyser is great. Okay. And Geyser is, they're doing a Patreon, an uncensorable way. You look at the Canadian truckers, you look at some of that type of stuff there and ways to be supported. That's not this. Okay. There are a lot of people who like to do good for the industry and they like to support these founders. But in reality, you're making investments. You expect to do well, right? It's not saving the rainforest here when you make an investment in one of these companies. And the wild ride that the company goes on, I mean, it's just been crazy with, I'm not really talking about Bitcoin companies now, but in my personal portfolio, I mean, there are companies, there was one that was the largest private company in Southeast Asia. I mean, it was worth $800 million. And one day I woke up and the front story on TechCrunch was they were out of business, and it was a zero. So just because a company and that was a lesson learned for me, because when I invested at like an $8 million valuation, and I invested again at 20 and again at 50, and I invested all the way up, and there was drones, this and that, and delivery system in Asia. And, you kind of get to that point where, oh my God, the news comes out. They just did a Series E. It's $800 billion or $800 million valuation. And then they go to zero. And I kind of, you don't really think that that's going to happen. And it is much rarer that it happens, but it's kind of a wake up call that it's never over until it's over, And then there are also the times where it really doesn't look like a company's going to make it. Like things are not looking great. They're still alive, like one of the Rocky movies or something. It's not looking good for our character here. He's just getting battered and battered. And then they come back and they pivot and they find product market fit. And, then they're doing better than ever and they succeed. That has happened too. And personally, I really like the experience of each company that, you are reading their updates, you are doing a post-mortem on them, maybe after they fail, and you just get to see what happened. Where did this go wrong? What happened here? And I actually really like that.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.